Howdy, everybody. Welcome to Liberty Call. Today is Monday, August 19th, 2024. Hope you're having a fantastical day out there in the interwebs. It's a little overcast here in Colorado, which I'm not complaining. It was quite warm over the weekend, and I was doing chores outside and stuff, and it was sweaty. Anyways, it was nice last week. It was just the last couple of days were kind of toasty. So, gosh, people calling me when I'm trying to do my show. Anyways, all right. Well, I'm glad you're here. Thank you very much. If you could do me a favor before we jump into the news, if you could give me some thumbs up, a like, a share, subscribe, a follow, and press that notification bell. All right, let's get into today's numbers. Looks like our domestic markets were in a pretty good mood. Dow Jones was up 0.58%, 236 points, closed at 48.96. S&P 500 up 0.96%, 53 points, closed at 56.07. NASDAQ up 1.37%, 241 points, closed at 17,873. The VIX fell 1.49% today. It's back down to 1458. Get off my screen here. Canada up 0.27, Brazil up 1.53, and Mexico up 0.09. Over in Western Europe, Germany was up 0.58, the UK up 0.55, France up 0.7, the Netherlands up 0.35, Spain up 1.4%, Italy up 0.68, Switzerland up 0.79, and Portugal up 1.02. Russian exchanges both in the red again today. The MOEX down 1.77 and the RTSI down 2.47. Asian markets, the Nikkei in Japan was down 2.01%. Australia up 0.12. New Zealand up 0.29. Let me reiterate that. In China, the Shanghai was up 0.49, the Shenzhen Component up 0.08, China 50 up 0.51, DJ Shanghai up 0.42, Hang Seng up 0.8, and the Taiwan weighted when it closed on the 16th was up 2.07%. All right. So those are the markets. Feel smarter? I know I do. Let's hop over to the weekly economic update. Stocks posted solid gains last week, buoyed by robust economic data. I don't know if I'd call it robust. And constructive comments from Fed officials. The S&P 500 rose 3.96%. The NASDAQ gained 5.29%. The Dow was up 2.94%. And overseas markets are up by 4.31%. Upbeat economic news. Three critical economic data points gave investors what they were looking for: wholesale inflation, consumer prices, and retail sales. Both the PPI and the consumer price index rose less than expected in July, reinforcing a picture of cooling inflation. I know I feel like I'm just chilling right here. The July retail sales report on Thursday was stronger than expected, which added more fuel to the week-long rally. Market action slowed down on the week's final trading day, with positive consumer sentiment gains countered only by a drop in housing starts. It was the S&P 500's best weekly gain of the year so far and the best since November of 23. The gains helped erase losses from earlier in the month when carry trades news from Japan unsettled investors. All right. Double assist. Last week's market rally saw assists from two places: economic data and constructive Fed comments. On Thursday, Atlanta Fed President Raphael Bostic said he had, quote, a lot more confidence that inflation sustainability is on its way to 2%, end quote, citing steady drops in the CPI. And St. Louis Fed President Alberto Musalem said, quote, the time may be nearing when an adjustment to the Fed's funds rate may be appropriate, end quote. May. Not will, may. All right. Economic data this week. Monday is the leading indicators. Wednesday, the FOMC meeting minutes. Thursday, the Jackson Hole Economic Symposium, jobless claims and existing home sales. And Friday is the Jackson Hole Economic Symposium, new home sales. Fed Chair Jerome Powell will be speaking. Companies reporting earnings this week. Monday, Palo Alto Networks. Tuesday, Lowe's, one of my favorite places to shop. Wednesday, TJ Maxx and Analog Devices, and Thursday is Intuit. All right, so that is the weekly update. Good stuff there. Let's hop over to the market recap. U.S. stocks climb on easing economic worries, Fed minutes, and Jackson Hole remarks loom. On Monday, the S&P 500 rose as recession fears eased, with attention turning to a busy week ahead. That includes the release of the Federal Reserve's July meeting minutes and a highly anticipated speech by Fed Chairman Jerome Powell at the Jackson Hole Symposium. Goldman Sachs reduced its 12-month U.S. recession probability to 20% from 25%, citing strong economic data that shows no signs of impending downturn. This adjustment is positioned between the long-term average recession probability of 15% and 35% estimate during the banking turmoil earlier in 23. The improvement in economic data since early August has made the U.S. economy appear more resilient, according to Macquarie. With recession fears cooling, market participants are focusing on clues about future monetary policy. The Fed is set to release the minutes from its July 31st, August 1st meeting on Wednesday, just ahead of Powell's speech at Jackson Hole on Friday. Powell's expected to provide guidance on the potential for a rate cut in September, with current expectations leaning towards a 25 basis point rate reduction. Morgan Stanley noted that Powell's speech might clarify the Fed's strategy, while the minutes could shed light on the decision not to cut rates in July and whether a 50 basis point cut might be considered. In corporate news, AMD gained 4% after announcing its plan to acquire server maker ZT Systems for $4.9 billion to enhance its AI chip portfolio. They probably just had some money sitting in the couch cushions and decided, hey, let's buy another company. HP Inc. saw a 3% decline following a downgrade from Morgan Stanley due to valuation concerns and potential slowing of demand. B. Riley Financial continued its slide, dropping over 8% after a significant decline last week related to its investment in Franchise Group. The earnings season continues this week with reports from companies like Palo Alto Networks, Target, and Lowe's are expected. All right. Good stuff. Let's hop over. Got one more article here before we wrap up the day. This comes from our buddy over at First Trust, Mr. Brian Westbury. And this week's article is titled Price Controls Redux. Yeah, because that worked out so well the first time we tried price controls during the Depression. It worked out well. FDR really knew what he was doing. No, he didn't. All right. In a recent article by Mr. Westbury, the historical failures of price controls and their potential resurgence in response to recent inflationary pressures are examined. Drawing parallels to the 1970s, Westbury recalls how President Nixon imposed wage and price controls in 1971 to conceal the inflation caused by excessive money printing by the Federal Reserve. Yeah, you got to pay for that war in Vietnam somehow. Although these controls temporarily masked inflation, the eventual lifting of these restrictions led to a surge in inflation, averaging over 9% from 73 to 1975. This historical record is filled with similar examples from ancient Rome to modern-day Zimbabwe. I think America's headed that way too, where price controls have led to disastrous outcomes, including shortages and economic decline. I think we're already on the path. Westbury argues that governments often resort to price controls because inflation is politically damaging. Despite the deceleration of inflation over the past 2 years, prices have remained elevated, prompting some politicians to consider price controls as a solution. However, Westbury points out the inconsistency in blaming private sector price gougers for recent inflation when such practices were not prevalent in the past 40 years. He highlights the global nature of the recent inflation surge, questioning why it would be a worldwide phenomenon if it were only due to local price gouging. Moreover, Westbury criticizes the rising costs of government services, such as education, where spending has increased significantly without corresponding improvements in outcomes. He suggests that competition rather than new regulations is key to controlling prices and improving services. Westbury is skeptical that price controls will gain traction, noting that even some politicians who initially supported the idea are now retreating from it, likely recognizing the impracticality and potential harm of such measures. Yeah, and there was an opinion article, I believe it was in the Washington Post Thursday or Friday. Somebody had a screenshot of it. And basically it was someone making the comment to Kamala Harris that if you don't want to be, when your opponent calls you a communist, you probably shouldn't come out the next day with price controls, because all that does is I personally don't think Kamala is a communist. I think she's a elitist opportunist who just regurgitates leftist talking points so people will vote for her. Because I don't think she personally believes in any of this stuff like, Bernie or some of the true believers who, I think they're idiots, but I really believe Bernie really believes in what he's saying. I think most politicians just say whatever they want or say whatever, the voters want to hear. So All right. Well, that's everything that I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information is there. I hope everyone out there has a wonderful evening, and I shall talk to you all again next time. Adios.